Hey everybody, it's Mike Weller. It's March 2020. I'm here with our monthly Yorba real estate market update. We're here, it's the second week of March. We're kind of in the midst of the coronavirus and what's going on with that. But I wanted to reach out to you with the Yorba stats, as we always bring them to you. So what we're looking at are stats basically through the end of February, and we're looking at the last 3 months of December, January, February. So it's been a really strong real estate market here. Of course, pretty much all of this activity does not reflect, the feeling we've had over the last week and a half or so. What we've seen in the financial market, the stock market, things like that. I do think we will get through this very well, but it is very interesting times that we are in right now. So let's jump into the numbers here. The average price in Yorba is $796, and it's actually down. That's down almost 7% from this time last year when it was $851. What that is about is we're actually seeing a lot more sales activity, and we've seen a ton more sales activity in the condo and townhome market, which tends to be lower priced. So that has kind of skewed the average price down a little bit lower. So don't get scared by the number, but I just did want to share that. The average dollars per square foot is actually up year over year. It's $383. This time last year we were at $378. So we're actually up about 1.3% or so. We have 216 properties on the market here in Yorba. This time last year we had 365. So we're looking at less than 2 months of inventory, 1.8 months of inventory. That's always considered a strong seller's market. This time last year we had 3.8 months of inventory, which in Southern California that would be considered somewhat of a moderate buyer's market. Getting into the specific categories that we like to look at, condos and townhomes. As I mentioned, activity's been way up there. The last 3 months, we had 126 sales close in that category. We only had 60 the same time last year, so more than double the number of closings in that condo and townhome market. Again, that goes back to why our average price has come down. A lot more activity. There's only 0.6 months of inventory there, where there were 2.8 last year. Single family starter homes, and we define that as under $800,000, $386 per square foot you're looking at. And we had 98 sales over the last 3 months in that category. Similar to last year when we had 91. That's such a limited inventory market. There's so many people that want to buy a home in Yorba in that 650, 700, 750 range that almost everything sells for the most part. So sales are up there a little bit. Sales would be up higher if we had more inventory in that market. We only have 0.8 months of inventory in that market segment. We had 2.3 last year. In the middle of the road, 800 to 1.4 million, kind of the bread and butter homes in Yorba. We had 108 sales the last 3 months. That's compared to 75 that time last year, or the same time last year, so sales are up there. Our inventory's down, again, 1.8 months versus 4.2. And in the luxury category, 27 homes above 1.4 million sold over the last 3 months. The same time last year, we only had 16 sales. So activity's up there. We're looking at 7.9 months of inventory. It sounds like a lot, but this time last year we had 9.9 months of inventory, so there's less inventory in that market segment as well. With what's happening with the coronavirus, if we do have a little bit of an economic pullback or recession, so to speak, that luxury market's probably going to be the one that gets hit the hardest and the most. There's still going to be a basic need for housing. It's really the luxury market that always gets hit the hardest and first. And keep in mind, what's going on right now is very different than the Great Recession that we saw in 2007 into 2008, and what the real estate market looked like really for about 4 or 5 years, from 2007 until 11 or 12. That whole financial situation was caused by fundamental issues in the housing market and fundamental issues in the mortgage market and the secondary mortgage market. That's not the case here. If anything, we're going to see a trend towards people maybe working from home, working remotely a little bit more. That the demand for housing is not going to drop off at all. So anyway, we might see some interesting activity here in the short term, but in the long term, you're the investment in your home is still pretty solid. Anyway, reach out to me if you have any questions about any neighborhoods in Yorba Linda, anything specific, if you want to chat about what's going on. I'm always happy to talk. I'm always happy to give honest feedback. If you've ever had a conversation with me, you probably know that. So anyway, stay safe. We will get through this and hope to see you sometime soon. Take care, everybody.